Welcome to another 21 Hats Dashboard brought to you by our sponsor, The Great Game of Business. I'm Lauren Feldman, and today my guest is Ami Kassar, who is founder and CEO of MultiFunding. Ami is an all-around expert on small business finance who has been a guest here many times and who writes a column for 21hats.com. Welcome back, Ami.
Lauren, always a pleasure to be with you, my friend.
My pleasure. Ami, you and I have been talking lately, and I know you have a sense that the economy may be shifting a little bit. I'm not asking you to be an economist or to make predictions, but you do see inside a lot of businesses. You see how they're doing and what they're trying to do, especially in terms of trying to raise capital. So tell us, what are you seeing out there?
Yeah, Lauren, so it is interesting. Again, this is not impacting everybody, but it seems to be that more and more small businesses or entrepreneurs, the accumulative impact of a number of things, higher costs, COVID money rate running dry, higher labor costs, higher borrowing costs, et cetera, are starting to catch up and cause slowness or slowed in many businesses, not all, but many.
And what impact is that having, especially when it comes to bank lending?
So look, it's interesting because I've always been hesitant in general, I'm hesitant to predict economies or what's going to happen to interest rates or this or that or the other, because I've always sort of, especially since COVID started and where I don't think there's any playbook for all the economic dominoes of infusing trillions and trillions of dollars of cash into the economy. And so for years, everyone said, oh, this recession is coming. And I didn't believe it because I felt that there was so much surplus cash in the system that it was that I thought it was going to take a long time for that to cycle through. And I also thought that a lot of inflation was coming, but we've sort of had this halo effect since COVID. I think, yes, money's been more expensive and prices are higher, but there's still so much surplus cash in the system. The question is that starting to catch up kind of on a macro level? And a few months ago, I wrote a column in the on 21 Hats saying that we were starting to see some weirdness in small business lenders' credit boxes or credit people tightening up and getting weird. And that typically is an indicator of potentially troubling sides ahead in the economy. We've seen that before. And that started to give me pause. Over the last several weeks, more and more of the phone calls we are getting are business owners hitting cash flow walls, hitting speed bumps or craters that they weren't expecting, like things were going, and then suddenly crash.
I mean, what do you mean by a cash flow wall? You mean that they're running out of cash?
Yeah, well, they're hitting a wall is like, shit, how am I going to make payroll next week? They haven't worried about that for years, and now they're worrying.
Oh, that wall. Yeah, I hear you.
They're worrying about that all of a sudden. Okay. Or they are about half of the P&Ls we're seeing. The numbers are flat or down on the top, but the profit margin, like the profit on the bottom, is lower because of higher costs. So it feels just intuitively that for some businesses, things are starting to slow down. So, and this might even be an interesting survey for you to pop up on 21 Hats, or maybe even tied to this thing. But I put out on some of the message boards I'm involved in, just asking entrepreneurs, how are you doing this year? Are you up and running and doing great, or are things slow and tough? And the answer is about half and half. So I think there are plenty of businesses out there that are starting to have a tough time.
Do you have a way of tracking the demand for bank loans? Do you have a sense that businesses are looking for? I mean, if you're worried about meeting payroll, you're probably not looking to borrow money to expand. Are you seeing that? Are you seeing banks lending less money?
It's interesting, Lauren, because I'm always hesitant to use our data as in like to create surveys or whatever based on the data about who calls us and who we try to help, because I um, I'm not sure our information is statistically significant enough. But it feels, well, for many years post COVID, we used to do a lot of small, like $350,000 or less working capital loans, growth capital loans with the SBA. And the economic injury disaster loan program dried that up considerably. The demand for that is starting to pick up again, largely because I think people are out of their PPP money and their idle money. And that it is suddenly people need infusions. What they don't realize there is that they have to go back to the government and ask for a lien subordination, which may or may not be easy to get, because there's a lien with the idle program on their company. So the data is hard to read. And then on the flip side of that coin, not all banks, but many banks are tightening up and tightening up their requirements to lend. I'm not trying to paint a doomsday scenario here. It's also an election year, which typically things slow down with the uncertainty of an election year. And there certainly is a lot of uncertainty out there this year.
Yep.
But there's just a lot of noise out there right now. I will not be surprised if we start to see interest rates coming down pretty soon, because I think that they're going to have to release that valve.
You said that you're seeing banks tightening up. Are you seeing clients that you're trying to help get a loan, not get loans that you think they would have gotten in the recent past?
Yeah, in some cases. Now, we're fortunate because we're fighters and we don't give up. All right. So we're always hunting out there for that lender who's still open to doing the deal. But it's not, I think it's a fair statement to say, but just purely from the cash flow perspective, borrowing costs are higher. So to pass cash flow today to get a loan is more difficult than it was 6 months ago or a year ago. And then that's just from the cost of the money. But then if the business is not also performing as well, that makes it also difficult. There are plenty of companies out there that are still doing just fine and healthy. But for every good story, there's also seems to be a story right now for a company that's having a bit of a tough time.
Ami, obviously, it's a very happy thing when a business that's doing well comes to you for help to get capital to try to expand and grow. Are you seeing companies coming to you now because they're not doing well and they think a loan will help them ride it out?
A lot. And the answer in those situations is, and I've written about this a lot, and we've talked about it a lot over the years, Lauren, is slow down and take a deep breath. The instinct is that money will fix everything. And while sometimes money is definitely important, I'm not saying it's not, you also have to look overall at what's going on Is there something that has to be resolved? Do you have to cut some expenses? Can you stretch some payables? You have to tighten up the controls around you and get some economic forecasts and projections in place and really get a good handle of what's going on. This is where the predatory lenders love to jump in and when people are emotional, offer them money quickly. And that is usually the biggest mistake you can make. Fortunately, there are some expedited SBA programs like bulk loans that you can, in certain cases, get up to $150,000 on a 10-year amortization and get it in like 10 days, and those can help. But just money itself, just looking at it like I'm going to get a loan now and everything is going to be okay, is usually a bad idea.
Whenever you're here, Ami, I like to have you remind people that if you get turned down for an SBA loan at one bank, that doesn't necessarily mean you can't get it at another. I think you were implying that a moment ago, that, you keep looking. How long do you keep looking? How many banks do you try?
Well, sometimes, again, if you feel like you need money, there's always more than one way to skin a cat. And sometimes I always say, like, take a deep breath or a cold shower and now let's figure it out. How much money do you need? Should it be a term debt or a line of credit? What are you trying to solve for? What's it going to accomplish for you? And then once you've laid out a couple of alternatives to get what you need, then sometimes you got to kiss a bunch of frogs to find your prince. Now, I don't know what the right answer is of how many banks, and also the best lender for you may or may not be in your backyard.
So how long do you keep going?
Lauren, I think that's I don't think there's one answer to that question. I think there are a lot of it depends in there. It depends on what you're trying to accomplish, how tight your situation is.
Got it.
I would also remind everybody that times of like change, like when times have changed, if we're living through one now, and I think we are, also create opportunities. So yes, you have to live with the you have to live through it and live to fight another day and maybe adjust some strategy and costs. But you also have to look at the change going on around you and ask yourself, what opportunities might this create for your business? Because we will get through this. I'm not here painting a doomsday scenario. I'm not here saying that I think the world is coming to the end. To the contrary, economies never move in straight lines, and rarely do companies ever move in straight lines also. And so sometimes you just, and if things are moving through a bit of a pivot in the macro sense, you also have to look and say, does this create opportunities for you in your business as well? Maybe you have competitors who are having a tough time, and this is a good time to try grab them up and purchase them. There are all kinds of different scenarios, but I haven't said this for a very long time. I will be very surprised if we don't see interest rates start to drop shortly.
How is all of this affecting your business, Ami? Presumably, if banks are tightening up and fewer businesses are looking for loans, that has to have an impact on MultiFunding, I would think.
Yeah, while our loan volume is up year to date, our revenue is about flat and our expenses are up. So we've been making some adjustments also proactively, trying to get ahead of the curve. I'm managing cash much more tightly than I was for last year. I'm looking at doing cash flow projections a week ahead, 2 weeks ahead, 3 weeks ahead, 4 weeks ahead. And we've also we're trying to get ahead of the curve, not behind the curve. Now, also in our business, it's interesting because we have two sides. We have a lot of fun when we help businesses that are thriving and doing great and trying to grow and expand. That's the fun part. But sometimes there's also businesses also need help when they're struggling, or they're in workout with their bank, or things aren't going so great and they need a different type of line of credit or move to an asset-based line or thing like that. So we're going to be fine, but we've tightened up our hatches and are going to push through it. But, we've cut some things out of our budget just as we work through all this.
You said that in times of uncertainty, there can be difficulties, but there can also be opportunities. Are there any opportunities you're seeing out there for your business?
Oh, yeah. I mean, we are looking at adding other product lines and services tied to this. We are working with more and more people when their loans are in the restructuring groups of banks, and there are other opportunities to help them. That's not as much fun as when you're helping someone buy a business or grow a business. Sure. But we're doing more work on the other side of the coin that we were doing last year or the year before. We're seeing some Main Street lending programs. Those loans come up to roost, and people need to get them restructured and refinanced. So we're going to be fine, but we have to pivot also. And I think there are many businesses out there that need to think about pivoting as well.
Ami Kassar is founder and CEO of MultiFunding, which helps businesses with their financing needs. This episode was brought to you by The Great Game of Business, which helps businesses use an open book management system to build healthier companies. You can learn more at greatgame.com. Thanks for taking the time, Ami.
Lauren, always a pleasure. Thank you so much.
Have a great week, everybody.